Unless you're a centurion, you've lived your whole life with the US dollar as the global reserve currency. If you've lived in the US during that time period, it's been really a big part of your life, even though you probably didn't realize it. And if you lived in other areas of the world, then you're probably very aware of the dollar's position and the fact that its exchange rate relative to your local currency has a big impact on your life and your local economy. The dollar's position going forward, though, is a bit precarious. And as we enter this new world with COVID-19 and a number of significant world events going on, it's probably a good time to examine the dollar's future as the global reserve currency. Before we get into that, we'll talk about, what does it really mean to be the global reserve currency and what is it? There are a couple different aspects of it. One is that the global reserve currency is the predominant currency used inside central banks as a securing asset for their country. It also acts as a medium of exchange in contracts between different parties, usually corporations, but sometimes countries or even individuals, to provide a mechanism. For instance, a beef trader in Argentina selling product to a buyer in South Africa would not work in either local currency, but would instead negotiate the contract so that all payments were made in US dollars. It protects parties on both ends from any risk in both their market and the other party's market. Finally, it provides a benchmark. Many of you would have experienced this with foreign exchange, maybe in an airport returning from a trip from Japan, where an exchange rate between yen and dollars is established. And the dollar really is the benchmark by which everything is measured. So when you go to the little foreign exchange booth, you'll probably see all the currencies represented as an exchange rate relative to the US dollar. Now, being the global reserve currency has some benefits and some downsides too. The first is that the massive amount of usage of the global reserve currency outside of its native market provides a level of stability and exchange rate involatility that are very beneficial to whichever country is the global reserve currency. In the current case of the United States, for instance, roughly 2/3 of all the dollars being spent in transacted are occurring outside of the US economy and outside of both the physical and virtual borders of the United States. All this activity and all this demand for the dollar insulates it from whatever is occurring within the country. So even if economic conditions within the US are poor, as long as demand for dollars is high to facilitate global trade, it insulates the US dollar and therefore assets held by US citizens from deflating. The other thing that's certainly become very common in recent decades has been the use of the reserve currency, again, the US dollar, as a weapon. It's usually seen as a first volley in front of military action. So bad actors, for instance, Iraq and Iran, Syria, Venezuela, North Korea, all these kind of countries have had sanctions imposed on them and restrictions that prevent access to the US dollar and to the global banking system. Their assets have been frozen. And so by being part of the ecosystem managed through the country or countries which support the US dollar and it as the currency of choice for global reserve is a very, very powerful thing. Now the opposite can also be true. It can be used for altruistic methods where, let's say, a smaller country who is suffering from harsh economic times but is deemed a good actor and somebody that we wish to help, by giving them access to dollars and giving them access to the banking system at levels in which they might not otherwise have access, is a tremendous benefit to them. So in a way, it allows the owner of the reserve currency to somewhat select winners and losers in the global economic game. Now, the downside of all of this is that in order to have enough currency to support activities outside the borders of the native country or host country, a whole bunch of money must exist outside of its borders. And the only way to really have that happen is for there to be a huge trade deficit, net trade deficit between that native country and the rest of the world. So it forces the native country into essentially a net importer position. And ultimately, this presents a big problem. And this problem was identified by economist Robert Triffin and called the Triffin dilemma, in that while it is advantageous to rise to the top and become the global reserve currency, ultimately that becomes a noose around the neck of that country, because the only way they can support those activities is by being a net importer at a massive scale. And ultimately that causes economic problems within that native country, which ultimately shake confidence in that country's ability by the rest of the world, and therefore it collapses upon itself. At least that's the theory. Now, history would show that roughly every 100 years since the 1400s, we've seen a new crown placed on a different country as the head of this system. You see from this chart, we've gone through a progression with many different shareholders: Portugal, Spain, the Dutch, the French, the British, and ultimately crowning earlier last century, the United States. You'll also notice that each of these periods has what's called a buildup period, meaning there was a period of time, usually of several decades, where a up-and-comer country was seeing growth in its economy and confidence growing in its currency. At the same time, there was a downfall occurring in the native country, or the reigning king. And then some major event precipitated a change. A black swan event precipitated change. Historically, that has been some sort of war. Most recently, it was World War I that saw the British give up their position as the predominant one. The U.S. had spent really the early part of the 1900s, post the Spanish-American War, seeing its economy grow stronger and stronger. And then when World War I occurred and the British economy was disrupted, we came out of that period with probably a joint position of the U.S. and the British, both holding kind of a common position for a couple decades. But when World War II happened, and obviously the British and all of Europe and a great deal of Asia were all decimated simultaneously, it really left only one logical country left. That was also, by the way, accelerated by the movement of essentially all the gold in Europe, in the central banks of Europe, over to the US, mainly for geographic purposes, because central banks in Europe were afraid during World War II that if they were overtaken by Germany, that Germany would essentially seize all the physical gold and move it into their coffers. So as a hedge against that, massive amounts of gold were moved to the United States during World War II, before World War II, and then during World War II, so that by late in World War II, essentially the world held, all the world's gold was essentially held by the United States. That gave the United States a fantastic position, and they leveraged that during the Bretton Woods Agreement in 1944, which was an agreement amongst all the Allied powers to set a new economic system where the US dollar sat at the center as the world's global currency. It had a fixed exchange rate of $35 per ounce, and then all the other world's currencies were pegged to it. Now, if we look at the central banks around the world, this chart here shows that the US dollar really is in a predominant position within central banks. There are about $11 trillion held within central banks around the world. 60% of that money is held in US dollars, about 20% in euros, and the rest is a smattering of smaller amounts from other countries. Now, the amount of money held in reserve has grown a lot since the mid-90s. In the mid-90s, it was only about $1.5 trillion that was held in across the world, and now it's well over 11 million. However, as the amount of money held in the central reserves has grown, the dollars have slowly been decreasing as a percentage, even though the absolute dollars have been increasing. So there has been some trend already away from seeing the dollar's dominance. There are definitely forces at play saying they'd like to see the US dollar in a less dominant position. Now, if we look around the world at different countries and their perspective on the US dollar's position, we can start by looking at some of our allies. The British and the Aussies, for instance, have been very, very supportive of the US dollar and its position. Their ties are very strong. If you read media accounts of different opinions about changes in the global reserve system, almost unanimously, the British and the Australians rally behind the US dollar. However, as we've seen growing economic forces in other areas of the world, China and Southeast Asia, places like Vietnam and Indonesia, growing as economic powers, we've seen that their support of the US dollar is not terribly strong. Certainly China, which now, depending on the measurement, is either the #1 or the #2 GDP country in the world, especially has some big problems with the US dollar in this position, and over the last 15 years has made numerous inferences to a desire to see that change. Some of those, which we'll talk about in a little bit, are to move to the renminbi as the key, and others are to focus on some other basket of currencies. The reason for that is somewhat apparent. we talked earlier about weaponizing, and this is a terribly powerful weapon that the US and its allies possess. You could argue it's as powerful as any of the nuclear arsenal that we possess. And if we were to ever direct that against the Chinese or some of the Chinese allies in Southeast Asia, that would create quite a problem. The other thing is, even outside of those countries that maybe are not as friendly toward the US, maybe some that are more in the middle, it does present the US is changing political and social stability, also become a bit of a concern. Um, the US has really much over since World War II has really been stable economically, politically, and socially over that entire period of time. But now we've seen cracks not only economically, but also politically and socially, especially the political polarization of the country. And as we're seeing right now, the rioting and the social discord also is cause for concern by many of these countries. So if we remember back from the chart that each time there has been a transition in the global reserve currency, it's always been precipitated by a build-up period of one currency and a diminishing appeal for the incumbent. So the question is, where are we? Are we in one of those periods right now? The US dollar has been in its current position for 75 to 100 years, depending if you mark the beginning as the end of World War I or the end of World War II. Regardless, this now puts it in the range of every other country's period of dominance. Referring back to that chart, every other incumbent held the position between 80 and 120 years and then collapsed upon itself. We talked about the Triffin dilemma before, and that every incumbent ultimately collapses upon itself, usually because of the trade deficits. Looking at this chart right here, which shows our trade deficits at least through the first half of 2019, we see that the last 25 years has really been an acceleration of this period to where our trade deficits now are massive. In parallel with that, we've seen the US GDP fall as a percentage of overall GDP in the world. This presents a secondary problem in that because the amount of activity outside the US is essentially now 4 times as great as the activity within the US. That means, if most of the activity requires US dollars in which to occur, that means that the amount of money the US has to export, essentially, we're exporting money when we import goods. We can only do that for so long. There's only so much liquidity we can manage, and this requires us essentially to print a lot of money anytime this deficit occurs. One argument could be made that the reason the Fed is printing so much money right now is to make up for this gap, that especially when consumption in the US goes down, that also means we're constraining our exporting of dollars. And without the Fed interjecting all this money into the system, it could easily collapse upon itself. We also mentioned in that previous chart that showed transition of primary currency, of primary global reserve currencies, generally was accompanied at the end by an accelerant, some sort of black swan event, typically a war. Well, I think we're all aware that we are in the midst of at least one black swan event, if not multiples right now, and we'll examine that a little further. But at this point, it's very clear that the US dollar is showing signs of weakness, and that the bigger question really is somebody else, is some other currency in the buildup period. Talking for a minute about the black swans, the COVID-19 event, pandemic, in and of itself doesn't really cause issues, but it seems to be a catalyst that is causing not only economic issues, as we've talked about a bit here with the massive infusions of money from the Fed that have both domestic and international implications, but also it seems to have put the country on edge. And now social issues and political issues seem to be exacerbated. As these events occur, what we've seen in the short term is the US dollar has actually strengthened. And I believe that comes not necessarily as a sign of people having confidence in the US dollar, but demand and contractual obligations for dollars outside the US are massive. For instance, there are over $70 trillion of non-bank corporate debt denominated in dollars outside the US borders. All of those countries are contractually, all those corporations are contractually obligated to fulfill those contracts using US dollars. So given this, if they are sitting in local currency right now and sitting in a period of somewhat panic or concern about global economic issues, social issues, and political issues, it would seem to indicate that they are out acquiring dollars as quickly as they can to make sure that they can make their contractual obligations. Some of those obligations, by the way, are debt, and some of them are commerce. But regardless, they facilitate the short-term demand for dollars. Now, in the long run, all this extra money that the Fed has put out into the market, though, has a dilutive effect. And it's very hard to imagine a scenario where at some point that doesn't create an inflative effect. This chart over here, which is one I made personally, so it's certainly not authorized by any economic organization, but I believe what it shows is that we're in an economy where certain goods, essential goods, for instance, you may have seen meat, have already instantly become more expensive, but as a result of COVID-19. But others have seen dramatic falling. We've seen it with fuel prices. If you want to buy furniture right now, if you want to buy a major appliance, if you want to get a hotel room, you'll find that those things are very cheap. Overall, it's been deflationary thus far. But at some point, all of those factors will flush out, and the inflationary tendencies of all this extra money being in the system will start to take hold. Interestingly, there is another economic effect called the Cantillon effect, which says that when you print new money and you inject it into the system, it typically takes a while for the effects of that to ripple through all the orders of the economy. It also says that those closest to the money will benefit greatly from it, and those that get access to it on the second, third, fourth, and fifth order will suffer from it. What that essentially means is that as new money comes into the system, the first people to get it get so essentially without the knowledge of the rest of the market. So the market doesn't yet feel the inflationary pressure, and the first person to spend the money gets to buy goods without the effect of inflation. Once that money gets spent and it enters the system, it enters the supply chain, it enters the labor force, it starts to get spent over and over again. The overall market realizes this money is there, and the price discovery mechanisms within the market start increasing the price. Now, one of the things that also has been an impact of the way that the current monetary system is structured is that when we left the gold standard, we left any semblance of a consistent money metric. As I mentioned before, during the Bretton Woods, we established a fixed price of gold at $1 for 1/35 of an ounce of gold. In 1971, we left the gold standard and all the markets started to free float. So what that meant was that great inequities were possible between the purchasing power available in one currency versus another. It also made it difficult to compare prices over time, the value of a given good over time. So the magazine The Economist in 1986 came up with a metric looking at the Big Mac, because what they wanted to do was find an item essentially available in every market in the world and look at the effective price of it in the local currency, in other words, a purchasing power parity index. And so they came up with the Big Mac, and this happens to be a chart from 1986, but it essentially shows the strength of the currencies within local markets, because the same basic good is being offered in all the markets. So clearly it shows that in Korea and Great Britain in this period of time, we had a weak currency relative to the US dollar. And up here, for instance, in Switzerland, we had a very strong one. But comparing things over time becomes even more complicated, because now if you want to compare the price of a Big Mac in Germany in, for instance, the year 2000 to the price today, it becomes a very difficult exercise, because we do not have something like the gold standard, which establishes a common metric of value across the world and across time. So in other words, this is a deficiency of the current global system. So where are we now? It's fairly clear if you look at the trade deficit, if you look at the press, the voice of the Chinese, some of the voices within the IMF, the International Monetary Fund, you'll see that there has been some waning of the US's role. Now, it's still very, very powerful, but it has lost some of its dominance. We also appear to be on the edge of the type of event that often is a forcing function to the beginning of the end. The civil unrest in the US right now is sending signals to the rest of the world that things aren't so solid in the US. And with the political situation being so polarized and an election forthcoming that, let's just say, doesn't present candidates that give vast majorities of people confidence, both within the US and externally, we have a bit of a recipe for a further tipping of the US dollar away from its crowning position. Now, if the US were to lose its position, what would assume its position? There are really 6 candidates, and we'll dig into each of them real quickly here. The first actually harkens back to the beginning period of the U.S. dominance. In 1944, John Keynes, very famous economist and British economist, was very leery of giving the U.S. this dominant position. Now, remember, the Britain was about to lose its position, and so what Keynes proposed was a new currency called the Bancor, which would essentially be the gold standard and be managed by a number of countries, maybe even reminiscent of the way the EU works today. But you know, by that period of time, the U.S. was in such a dominant position in these negotiations that it was able to squish this movement toward the Bancor and assume its mantle at the top. Throughout time, as you read on this subject, you'll see that other arguments were made, but for the most part, the period of the 50s and the 60s was such a great economic period for so many of the Allied countries that nobody was really calling into question the U.S.'s position. Post 1971, when the U.S. left the gold standard, some feathers were ruffled. But even then, for the most part, things just chugged along. The financial crisis of 2007 and 2008, though, created some louder voices than maybe we've heard before. And in part because these voices started coming from new areas of the world. The Chinese were, at that time, an economy rapidly on the rise, and by most accounts, by most people's account, the currency most likely to take a significant position at the table. The Chinese tried in 2007 and 2008 to make an argument through the IMF, to use what's called the SDRs, the special drawing rights of the IMF, and use that as a basket of currencies that could usurp the U.S. as the global currency and become the means of international commerce. That didn't take hold. I think obviously the U.S. was against it. Major forces in Europe were against it. They were of course hoping the euro would take that position. And if not, they would prefer the U.S. probably to stay where they were than to relinquish control to the IMF. Essentially, though, if these sort of ideas of a basket of currencies blended together to create a common global currency for international commerce and for international debt really have a difficult toll to take, because agreeing on what currencies are in the basket, what the weighting is, meaning how much of each currency is held in the basket, and then most importantly, who's in control of the basket, are such difficult issues. It's hard to imagine a scenario where agreement could ever be made on this. Great in theory, but in practice, probably impossible. Now, the euro, you'll notice from the holdings of the central bank reserves that roughly 20% of central bank reserves are already in the euro. Now, part of that comes from the European Central Bank itself holds a lot of euro. And its member countries have holdings of their own that creates a lot of that. At the time of its creation, certainly the members of the EU were hopeful that they could take a position alongside, not necessarily in an adversarial way, but maybe in a friendly, competitive way with the U.S. But dissension within the system kind of showed itself very quickly. The European Central Bank has a number of critics, even within its community. It's often accused of showing favoritism, especially toward Germany. Brexit has been a major blow to it, and it appears to have reached its maximum potential already. And it does not have the stability I think the rest of the world would need to ever move to it in any manner bigger than it currently is. In fact, it's probably more likely that it will drift downward if it even survives. Many people feel it may not survive this decade. Now, the Chinese and the renminbi, they are a formidable power. As mentioned earlier, the GDP of China, measured nominally, is the second largest in the world. Measured through purchase price parity, is actually number one in the world today. That alone should make it a formidable candidate. However, the Chinese government does not allow the renminbi to float with the rest of the world. It pegs it to the US dollar. It manages itself in a very untransparent, secret way. Very few countries, I think, would be willing to place their destiny and the fate of their economic future into the renminbi. And the Chinese are also moving very hard toward central bank currencies, and the likelihood that the renminbi actually turns into a true central bank currency with all of the surveillance and control tools available to it is probably just too scary for almost any country or for any practical use at the corporate level or at the personal level. So it's hard to imagine a scenario where the renminbi finds its way into any sort of dominant position or even a challenger position. While it is held in 2%, 2% of it is held in central bank reserves. And it's probably likely that that number will move up, because I'm sure China will start forcing certainly lesser countries that want to buy products from it to use renminbi. But it's hard to imagine that number growing much certainly beyond where the euro sits today, if it can even reach that level. Not enough to truly challenge the US dollar. Now, a dark horse in the race for global currency dominance would be the Facebook Libra project. Facebook is a corporation, and historically, at least in modern history, money and government have been synonymous. Facebook is the first real attempt for a corporation to take this position. What makes them especially formidable is that they have 2.6 billion users. If you think of them as a virtual country or sovereign in a certain way, that makes them very formidable. If you combine that with the fact that their penetration into the lower classes and into disadvantaged countries is very high, and that many of those populations are very underserved. An interesting statistic is 31% of the world's population is unbanked. That's almost 2 billion people. But many of them are on Facebook, and a growing number are finding access to the internet. Facebook's charter, as stated with Libra, is to solve this unbanked problem and create a system of international remittance and bill paying for the masses. They're trying right now to play nice to, certainly in all the major countries, develop a system which follows anti-money laundering laws, KYC laws as best as possible, and create a structure that that doesn't force them into courtrooms over and over again. If they are able to solve this and connect 2.6 billion people to each other in a way that they can economically transact in a borderless fashion through a new currency like Libra, it presents a formidable economic force. And as the decade progresses, if they are successful with that, and if massive amounts of money start flowing through their system, the likelihood that they will try to expand their reach and take a position stronger than just a payment network is quite high. So at this point, I don't believe they are in a position to challenge the dollar, but they are a currency and a movement worthy of paying attention to. Now, the other alternative currency, also disassociating itself from government money, is Bitcoin. Now, Bitcoin is the world's first cryptocurrency, and unlike Libra, it's more than an idea. It's actually in practice. It has been in place for over 11 years. It has over 30 million active accounts. It has the advantage relative to the dollar of being immutable, meaning that transactions that occur on it can't be changed. All those transactions are transparent. They're known to everybody. Bitcoin can't see a border. It does not know or care where people are when they transact. And it has a fixed money supply, meaning that the activities of organizations like the Fed and the printing of money and the distribution of money in kind of this trickle down sort of method aren't possible. So it has the appeal to a lot of people, many economists included, of being essentially immune from political forces and manipulation, and also immune from incompetence. Many people feel that the central banks and their money printing, manipulation of interest rates, those sort of things is essentially guesswork, and that we are better off to let market forces determine the economic conditions and then just deal with those economic conditions versus trying to shift forces and keep ourselves in a constant state of prosperity. In other words, the cycles of ups and downs are actually okay because they are part of capitalism and part of a free market, and ultimately create stronger economies. Countries like Iran and North Korea, who have been feeling the effects of the weapon of the US dollar enforced upon it, have already been very active in acquiring Bitcoin. So they see it as a mechanism to protect themselves and still participate in the global economy. I have no doubt that many other countries are doing the same thing. Anybody that is in any way threatened by US sanctions most likely has efforts in place to acquire Bitcoin already. The other great thing about Bitcoin is I mentioned the fixed money supply. Well, the fixed money supply essentially means inflation doesn't really occur within the Bitcoin world. And it provides the opportunity for there to be a global value metric, both across the globe at any point in time, and also a way of measuring over time that is dramatically better than the US dollar, because again, it's purely an economic tool. It isn't influenced by social or political factors. Now, Bitcoin is still relatively small. It has a market cap of just under 200 billion. And I mentioned before that the central bank reserves are something on the order of 11 trillion. The amount of money sitting in U.S. corporate contracts, commerce amongst in U.S. dollars by corporate entities is about 74 trillion a year. So Bitcoin is not in a position yet to be big enough to challenge the US today. And it also still doesn't have the widespread confidence, acceptance, and trust of the global community. But it is growing. It is in use today. And it's already a part of the system, even though many people don't want to accept that. Now, the US dollar itself is in such a formidable position that it won't give it up overnight. As I mentioned before, the mere fact that $74 trillion of corporate debt is denominated in US dollar means that any change will take years just for that to convert to something different. But the reality is the trade deficit, as predicted by the Triffin dilemma, is massive. It's growing. The US dollar continues to be strong, and the trend of exports massively overtaking imports is not going to reverse soon. The political and social instability within the US are shaking confidence in certain corners around the world. And many portions of the world just flat out don't trust the US or like the US, and they want to see it decline. They will actively seek alternatives. So while the decline doesn't necessarily mean a collapse, the US position is absolutely in question. So let's kind of wrap up here and look at what does the next decade maybe look like. There's a good chance that COVID-19 and all the resulting actions, economically, politically, and socially, are going to put a big strain on the US dollar. A lot of these things were already starting to crack, but the strain of this is certainly going to accelerate that. But currency isn't like royalty or a presidency. Crowns don't move from one head to another just in overnight. It's a lot more likely that another currency will rise up slowly for quite a while until it approaches the dominance of the US. Once it does, then there'll probably be a very sudden change. There's a phrase often used in the Bitcoin world, or in anything with exponential functions, gradually and then suddenly. So I think that we're in that situation where this change will be gradual and then sudden. And this is probably the decade of gradual. The euro is not going to overtake the dollar. It's hard to imagine that ever occurring, at least in its current structure. As long as the Chinese is a communist entity managed by essentially a dictator in an intransparent way, that makes it a non-starter as a globally dominant currency. Libra is possible, but it will take quite a bit of time. It needs to launch first. then it needs to establish footholds, especially in the developing countries, and then maybe it can make its play. But that seems to be many, many years away. Bitcoin has already done many of the early things, and so it is really the only formidable candidate to rival the U.S. dollar as in its apex position. In my opinion, it probably is somewhere on the order of 3 to 5 years away from acquiring the confidence levels needed to truly be dominant. And by that, maybe I'm talking about assuming a double-digit percentage position within the reserve currencies portfolio around the world. Once that happens, though, the U.S. dollar will be in a precarious position. It's probably more likely that Bitcoin will slowly grow from its current position, maybe up into the 10 to 20% of central reserve currencies, and then I believe we'll be one more black swan event away from a flippening of the U.S. dollar position and Bitcoin. But this won't happen quickly. The U.S. dollar won't go lightly. I don't think COVID is the killer blow to the U.S. dollar, mainly because no other currency is yet in a position to assume the crown. So I think it will sink gradually, and then when the next black swan event occurs, well, I think we'll have a new king. So thanks for listening. I hope this helped you understand. I should also say that there are plenty of people that disagree with me. This is one person's opinion. But I hope at a minimum it gives you a chance to think, and as new news and new information starts coming in, start to reach your own conclusions. Thank you.